So I decided to do a second part of this market structure slash bias slash top down analysis video, even though I thought, no, let's just leave the 17-minute video because I was really burnt out in the morning, and probably burnt out because I was really pissed because of how load shedding really screwed me over. And today there's literally no load shedding, bro. That is really heartbreaking, honestly. It's really heartbreaking. I can't even explain how painful it is when something like that happens and you miss all those opportunities and all those trades, bro. But but it's Nasdaq, man. It's Nasdaq. Hopefully, it's gonna retrace. The problem with the Nasdaq is that it has a tendency to just run, to just fly or just fall without giving that many retracements. That's why when it comes to Nasdaq, I usually scale all the way down to the 1 minute and the 3 minute time frame, because I'll end up missing those opportunities, right? So remember what I said, scaling down to them, or what I mean is it's actually what I mean is actually dropping down to the 1 minute and 3 minute time frame, basically top down analysis, as we say in the previous video, right? So we're gonna continue on that, but I'm opening a different asset this time around because I thought, okay, let's do separate videos with different assets. On this video, we'll be strictly focusing on the two Forex pairs that I said you guys can trade and interchange. Euro USD and GBP USD. Those ones really do well with my trading system. Okay, all pairs can be traded with my system, but from countless back testing and forward testing and checking out the behaviors and stuff like that, these are the ones that I chose that have the least losses, if I may put it that way. These are the ones that have the least erratic movements, right? But you have massive risk to reward ratios. Even a pair like EU has massive risk to reward ratios, because if you look at this 5 minute time frame, just look at how beautiful this structure is. Remember in the previous video we talked about high highs and high lows. Just look at that. If you knew on the high time frame, let's say maybe on the daily time frame, you were going for a buy, you could have caught this trade somewhere here. You could have caught it there. Why? Because there's a fair value gap right there. There's an imbalance right there. Obviously it wasn't covered, but you could have caught it and put the stop loss down below there, because even if it was covered, you could have still put the stop loss down below there, and you would be in good profit right now. But when it comes to things like Euro USD, sometimes it can even come back down below. It can even come and cover this fair value gap right there. It can come and cover this fair value gap right there. It keeps on creating imbalances and imbalances as it goes up, but the bias is not necessarily a buy yet. Remember what I said about EU right now. We don't necessarily, I'm not necessarily saying it's a buy yet, because we're still waiting for the daily candle to close, right? We're still waiting for the daily to close. What I said on the previous video is that it wasn't this high or still very low. I said we might either anticipate getting a bullish momentum close, pointing in the upside direction. Then maybe we might get a movement upwards or slightly moving upwards, but basically we might expect it to expand upwards for a day or two, and then maybe it will drop, or maybe it will continue moving upwards. Or another scenario was that we would anticipate a break below the 0.5 thousand, the 0.07500 psychological key level right there, or the support level. Let me use simple terms, right? Because I had a sell trade over there on the FTMO account, as I showed you before. But on Saturday, Saturday or Sunday, I remember telling you guys that I'm thinking of closing the trade, and I did close it. I remember telling you in another video that I've closed the trade. I closed it Monday morning because I said I do not want to mess with that 1.07500 level, because it's a very strong key level, and the market has a very high probability of bouncing off there or reacting off there, because this was the previous close that we got from Friday. This close right there, price rallied down, but it was rejected and it left a long wick down there. This gap, the distance of this wick is quite massive from the close to the low. That's a very huge gap and at a major key level. So I was like, oh, that means that key level, there's some orders sitting there. Like, there's probably some orders in this region right there. And look at what happened yesterday. It was undecided, it moved sideways. But usually when the market does something like this, the retracement is close by. It might not happen now, but it's pretty close by, right? But close like this. But seeing these kind of candles, it doesn't mean start entering a trade, because it can still dump. It could have still dumped even further, right? So that's why we look for more solid candlesticks, like the momentum candles, getting another spike through and a rejection, stuff like that. Basically, we're looking for those kind of candlesticks. But this video is about bias, and yeah, it is about bias, right? If we close with a momentum candle, then the next thing we do, if we got a momentum close, then we would step down to, let's say, the 5 minute time frame during the London session, or like an hour or two before the London session tomorrow, and then you'd catch a buy at that moment, or even during the London session, because as you can see, it's probably going to give you a lot of opportunities. As you can see, the way it's moving right now, it's going to give you, EU is always going to give you this kind of movement where it creates higher highs and higher lows on the low time frames. And if you have the bias down packed, and if your direction is down packed, then when you go to these low time frames, it's easy for you to catch these movements right here, these dips right here, buying at a discount. You get to buy at a lot of discounts, right? But Nasdaq rarely gives you this kind of movement, and it rarely gives you this kind of movement. Sometimes you have to step as low as the 1 minute time frame for you to see something of this nature. So anyway, here another demonstration of I don't like back testing, guys. I prefer forward testing. I think I've said that many times on my other videos. I prefer forward testing, using a low risk forward test, because the emotions are involved when you're forward testing, unlike when you're back testing. There's a small detachment of emotion sometimes. So the monthly time frame on EU is bullish, right? I don't know why it's showing us signs that we might get some euro strength in the coming months, but who knows? But what the monthly time frame is telling me, based on this structure, this is sort of like a morning star setup. This is a morning star setup. If for you guys who like using those terms, but for me it's simple, right? We're at a key level. This is a strong key level right here. We're at a key level, or a level of support, a strong level of support right here, right about there, at the 1.052, right? 1.052 region right there. Price came there, rejected off of that level. It's a double bottom as well for those who love patterns, but you don't necessarily need to know those things. But it came back, it rejected there, it left a strong bullish momentum candle, or for those who love to say bullish engulfing candle. But engulfing just basically means it can fully cover these previous candles, right? So bullish momentum candle, and we had a retracement right there, retesting these key levels right there at the 1.05075. So the monthly time frame is telling us we might get an expansion upwards, higher possibility of an expansion upwards. And as for the weekly time frame is still bearish. That's the thing about the weekly. It's still bearish based on these the candlestick from the previous week, right? That's why with the weekly time frame, I'm very cautious. Okay, so there's a possibility that the market might still drop even more. So that's why the importance comes on the daily time frame, right? That's where the daily time frame comes in. If the daily time frame closes with a bullish momentum close, then you buy it, right? But if it pushes down below and closes below the 1.075 level, then it will probably tank to the downside. But I'm more favorable with the upwards reaction, or the upside reaction, the momentum close to the upside. So it's a two-way scenario. We basically wait for the market to tell you where it wants to go. It's like a car, right? A car is going to indicate if it wants to turn. You'll see, okay, this car is indicating left, so it's going to turn right about here. So let me stop and wait for it to turn. It's basically like that. Because if you rush in, the car is going to hit you. It's going to hit you. So you need to first let the market indicate to you, or the market give you signs that it's headed to a specific direction. Then you can go down to the lower time frames and start trading in that direction, right? Those entries, there's a reason why I didn't catch those 5 minute entries on the Euro USD. I haven't had a clear indication of where the market is going, right? I have small hints of signs that, okay, buyers might have stepped into the market here, but it's not clear, because we're coming from a strong bullish, we're still in a bearish trend on the daily time frame. This is a strong bearish trend right there, and we have a previous low right here, previous lower high right there. We haven't broken it, so that's why I'm waiting for things like that, momentum close, or we get another strong close above this previous lower high over here. We close above there, then maybe we're going high. But if it comes back and breaches this 1.075 level, then it will go lower. So that's basically that. Let's see. Is there another example? There is an example before. For example, over here, it's a similar scenario with what we're seeing on EU right now in the monthly time frame. It dropped over there, pushed up, right? Close to the momentum close, but yes, you might have made profit with this rally upwards. It did rally upwards a massive amount of points or massive amount of pips right there. Before it came back down, you would have made some good profit right there, but it came back down. Some people might have been stopped out. People who held the trade, they were probably stopped out right there. But look at what happened. These are the types of candlesticks that I'm talking about. That okay, we wait for these types of candlesticks to form, where it rallied downwards, it created a hammer close. This is a hammer close. That's what they call it. But with me, what I see with these candlesticks, or what this candlestick is saying to me, basically watch the advanced candlestick video. It rallied downwards, sellers pushed the price down, but when they reached this region right here, there were orders, there were some buy orders right there lying around those regions and maybe even higher. So those buy orders were triggered, or some people started buying into this market, or it caught the interest of investors at this region, and investors stepped in. It pushed all the way upwards, and this thing has a history of catching the interests of investors in the past, like over here when pushed up, and over here it has caught the interests of investors in the past before, and over here as well. So when it did something like this, that was a clear signal that okay, you should start looking for buys. And then here's another clearer confirmation with this momentum close right here. This momentum close right here on the 2nd of November, when it pushed upwards, even though it was rejected at this point, but it's still closed with a very strong body. The body is still very huge, right? The body is still very huge, and this is the type of candle that is usually filled by the market in the following day or the following week. And that's exactly what happened. The candle was filled, the level was broken, it came back, it retested that previous level right there, and it created another signal right here with this candle, right? That is creating a higher low, and the trend has changed. And then what happened the next day? It shot upwards again. So it keeps on doing the same thing. The same patterns will always repeat. With me, I just look at the candlesticks, honestly. I look at the candlesticks, at how candles behave at certain key points or key levels in the market, and those are my signals of when to enter trades, or when to be on the lookout for a specific direction or a specific bias. Same thing over here, but I speak mostly about these things on the advanced candlesticks video, right? You can check it over there. But basically, the whole point of a market direction and a market bias, go to the higher time frames, like especially the daily time frame. If you're still new and you're not used to things, don't go as high as the monthly and the weekly. Start on the daily time frame, get your direction on the daily, and then step down to the intraday time frames. Step down to the intraday time frames, the 1 hour time frame, 4 hour time frame, and start getting your entries right there, right? 15-minute time frame, you'll get your entries even there. Even the 5-minute time frame, if you have a good entry strategy. Depends on your entry strategy which time frame you'll use for your entries, right? So it doesn't matter how accurate your entries are, or if you have sniper entries, don't pay attention to things like that. It's not about the beauty of the entry. It's not about the beauty of the entry. It's about the beauty of the risk management and the beauty of the growth of your capital, right? That's what it's about. At the end of the day, the one who succeeds is the one who has consistent growth and the one who has a profitable equity curve, right? It's all about the equity curve. In 30 trades, are you profitable? In 40 trades, in 20 trades, are you profitable, right? So it's not a game of gambling, it's a long-term game. So we'll see what's happening with EU. Is it going to continue? Because it has broken this higher low region. Is it going to break this massive higher low region? This is a very huge higher low region right here. Is it going to close above it, or is it going to find some sort of resistance during the New York session and dump to the downside? So we'll see what happens in today's New York session, right? It's only about 1, 2, 3, 4. It's about 3 hours away now. It's only about 3 hours away. So some movements will start happening in about 1 hour's time. In about 2 hours, actually. Some movements will start happening. Then we will know how the daily time frame is most likely to close. So EU is a little interesting as well right now, but I'm mostly focused on Nasdaq for December. But we'll see. We might end up catching some small swing trades on EU, maybe a small 40 pips or a small 60 pips, right? Get those 1:3, those 1:2 trades, and then sit it out for the entire month. So we'll see how that goes. I think that's enough for this specific asset, and I think you guys now get an idea of how top-down analysis actually works. Top-down analysis is basically getting a bias from higher time frames or from higher time frames that are in confluence, and then stepping down to the lower time frames for entries, those intraday time frames, right? So anyway, that's it for this specific video. This is market bias in terms of Euro USD. So you guys can then practice it, forward test it, back test it, do whatever you want. And a reminder again, watch the risk management video, because that's a very important episode for you to watch.